What's up guys? So Tesla and the broad market is doing exactly what I said was going to happen. In my last video, I talked about some bearish signals that would bring the broad market down and how this could also end up spilling in the price of Bitcoin. Don't panic, this will most likely be a buying opportunity if you know how to buy bottoms using a systematic approach. In this video, I will share with you my mechanical trading strategy that helps me generate consistent profits swing trading the stock market. Very quickly, starting with Tesla, we knew that on the short term we would most likely have a pullback to the means. That's exactly what ended up happening after disappointing earnings. At the moment, Tesla is finding some support at the means. There is still a possibility of going lower depending on the broad markets. If this broad sell-off continues, Tesla will most likely go to lower levels. And if not, we'll most likely have a beautiful bounce here back to these higher levels right here. Later in this video, I will tell you my game plan to buying the dip. So this is why I love having a mechanical approach to trading. It makes it easy to react to different outcomes using a set of rules that I just follow without having to guess or use my intuition. So why did we have this big drop in the price of Tesla in just one day? The reason is simple. Earnings were horrible. Margin was good, but the rest was pretty bad on the short term. Obviously, the long-term innovation being built at Tesla is still intact. This is a normal correction that we knew was going to happen based on probabilities and will end up being a beautiful buying opportunity. So when should we buy the bottom? That's when it becomes important to look at the broad markets like the S&P 500. In my last video, I talked about multiple bearish signals forming. The good news is looking at the probabilities, we are now at a buyable bottom since yesterday. However, I do have a big concern, which is the momentum on the weekly time frame. So I keep it very simple. On the weekly time frame, trend following is crucial because of a lot of funds using it. You have CTA funds. I'm not going to go in details of what those are, but they basically trade billions of dollars of capital using trend following. So if we just look at a very simple tool, which is the MACD on the weekly time frame, we can see that we're cross right here, guys. Okay, so obviously this is very bearish. It's not good. There is one momentum time frame you really don't want to piss against. It's the weekly time frame. So on the medium term, the momentum has triggered the start of a potential downtrend. Definitely not something you want to see if you're bullish Bitcoin. I'm also going to talk about this later in this video. If this sell-off continues in the stock market, it most likely will at one point also affect the crypto market as well. Precisely when everyone is getting bullish again after the big correction Bitcoin just had. So am I expecting a major crash? No. But one thing that's really important to understand is that based on probabilities, we are at extreme historical level right now. And on top of that, we have the momentum right here shifting to the downside, right? So now the question is, well, how low could we go, right? Am I expecting a huge major crash? Not really, honestly. I'm just expecting a normal correction. The worst case scenario, guys, would be a 10% drop, which would bring us to the means right here. And we would still be in the EMAs right here, and we would have a beautiful bounce, and that would be a beautiful buying opportunity. I don't think that is likely. I think what's most likely will most likely be a retracement to about the first standard deviation here, combined with these EMAs. These moving averages will most likely create a big support. It's about minus 4 to 6% to the downside. Worst case scenario, I'm seeing about 10%. And then those are going to be beautiful buying opportunity. Don't forget to be careful with Bitcoin until the weekly momentum also shift to the upside. That's my big concern with the bounce we just had in Bitcoin, which was a beautiful bounce, which we called on this channel. But until the weekly momentum really shifts to the upside, guys, this could still be a dead cat bounce with a very nasty looking pattern. The good news is it looks ready to have a bullish cross anytime soon in the next coming weeks. But at the end of the day, right, it's hard to predict those type of stuff. You just need to have a plan accordingly and to know what to do when specific signals are triggered in the market. So for me personally, I am still waiting for this very important signal to be triggered for me to, potentially add more to my crypto positions. So basically, that's pretty much the problem right now in the broad market. It's the momentum on the weekly time frame, which is a very important trend following metric that is not looking good to the upside. So what's my game plan? I will wait for the broad market and sector ETF to hit lower levels. Also, I will be monitoring sector ratios, the rotation of capital from institutions, and I will start buying more once the internal confirms a bottom. So at the moment, there's still two internals I'm still waiting to get triggered. The first one is the RSI percentage when we are massively oversold, and usually we get these extreme reading at the bottom. It basically shows the pressure on the sell side and usually coincides with a capitulation bottom when we are at extreme. So this is why I am slowly buying the dip and I'm not going all in yet. And the second one is the smart money, dumb money confidence. So at the moment, the red line, which is dumb money, they're not selling aggressively as I would want to. They are selling, but you know, this is no near the levels of usual capitulation. So retail technically is still holding in there. But like I said, most of these rules already got triggered. This already made me start to buy into sector ETFs with very low risk, like SMH, semiconductors, XLK, right? Just technology and the big caps. If we don't go lower, my trigger to buy more will be the weekly momentum shifting back positive, guys. It's that simple. So if I'm not able to add more on the downside because the market has bottom, that's fine with me. I'm just going to add more once the momentum comes back on the weekly. Regardless of the direction, it's always important to have a strategy set in place for all outcomes. Being like water will make you a very consistent trader on the long run. However, this will be a short-term trade for me. The stock market is at a very concerning level right now. Bigger picture, we are at an extremely high level looking at historical trend. This is triggering one of my bigger picture strategy on the short side. I don't want to show everything I'm using, obviously, so I'm doing this for entertainment purposes. But if you're interested, you want to learn more about the mechanical strategies that I use on different time frames that have made me very profitable throughout the years, just comment down below. Whatever you want to comment if you want to learn a little bit more, and maybe we can have a chat together. So to be clear, I'm not expecting a massive crash, but bigger picture, a reversal to the means is inevitable. So the means would be in the middle. It's basically the fair value of the S&P 500 bigger picture. And then, using moving averages on bigger time frames that have been, historically very strong support when you back test them through time. Again, if you're interested to kind of go more in detail in this, let me know in the comments. I've had some people reach out. That's why I'm kind of just saying this out loud. So don't be shy to just comment something or reach out. I had like 2 people reach out to me. So if you're interested, just let me know if you need some help. So this is definitely one of the strategies I love using for long-term portfolios when it comes to long-term investing. And the returns are pretty crazy when you look at them bigger picture. Imagine if you could, just using these simple strategies bigger picture, just for your long-term investment portfolios, buy every time we're close to the bottom. You don't need to catch the bottom precisely, but imagine if you just bought into those bottoms, even if you were off by 10%. You could add 10 years of retirement in one single year by simply using mechanical trading strategies that are backtested through time. Let that sink in. All right, so last thing I wanted to show you guys to back up what I'm saying bigger picture, right, is looking at the internals, right? Looking at positioning of participants to see where is the pain trade. The best time to buy, guys, long term, using the chart I just showed you, the tools and the moving averages that you can backtest historically speaking. But you also need to combine it with what are market participants doing and what's going on in the market. So best time to buy is when you also add this as a confirmation when the advisor exposure is in the 20-25% level. That's really a good time to also buy the markets, by the way. And so then this is also the University of Michigan stock exposure, very important. Obviously we're at pretty high level, guys. This is not a level where you want to look at the chart and be like, oh yeah, well, I think it's a good long-term buying opportunity, right? So you got to be careful. Obviously, this was a great buying opportunity, right? It can be very simple to make a lot of money in the market, guys. Doesn't need to be complicated. You just need to have a mechanical trading strategy. And then another very key metric that's really important, to sniff right before we actually have some, pretty severe correction. Like I told you, I'm not expecting crazy correction, but 10 to 15% would not be out of the question using probabilities. And looking at the cash allocation, we are finally, guys, everyone got rid of their cash. So basically everyone is all in the markets right now, and we basically, this is an Elliott wave pattern, by the way. So we're pretty close, in my humble opinion, of a very nice reversal, precisely when no one has some cash to buy the bottom. So that's when you have aggressive sell-offs in the market. Obviously, this is not like 100% precise. It can be off by a couple of months. So this is why right now I am buying the bottom short term, but bigger picture, looking at this in the next coming months, we might see some more aggressive sell-offs in the market. So just be aware of that. All right, so that's it, guys. So hopefully you learned a thing or two. Sorry if this was confusing. Short term, I'm expecting a reversal to the means, to the upside, but bigger picture, I would caution on thinking that this is a long-term dip buying opportunity. All right, so that's it, guys, for me today. Hope you learn a couple of stuff, and this will help you, just make a lot of money in the markets. All right, take care. See you soon, and stay blessed.